And we do have a great guest. Arnout Ter Schure is with us. Arnaud, it's
Hey,
been such a long time. It's great to have you back in face. How have you been,
hey,
bro?
I've been great. How are you doing, Dale?
Pretty good. What a couple of wild weeks we've had here. I'm going to test my memory out. When was the last time we were together? Do you remember? 6 months ago or
It's
so?
yeah, I was supposed to be on in July, but unfortunately, I was really sick.
Yeah. So
And
it's probably about 6, 7 months.
yeah, I think so. Yes, I
All
didn't
right.
even.
Well, you were constructive the market then. I think we're trading, I don't know, 3,900, 4,000, and I remember
Right.
you looking for 4340 or so on the
Correct.
upside,
Cor-
but God, so
correct.
much time and so much so that my memory still is pretty good. I remember what my guests say so I could fry them if they're wrong.
That's
Anyway, I don't fry anybody, just myself. So,
yeah.
um, you want to share your screen, Arno, and tell us what you're seeing now? Um,
Yes.
you know, okay,
Here we go,
I,
right? We're good.
we got it. We got it.
Wonderful, wonderful. That's a very good memory, Dale. Better than mine. I didn't even think that far back. I must
Yeah.
admit. So that's a really
Uh,
great start. Yeah, half a year ago, that's what we were looking for, and I think we've achieved it and actually exceeded it as well.
yeah.
But you can't predict the future, right? We can only make a prognostication slash forecast about it.
Oh my God. How many times has your preferred count changed in 7 months?
More than I dare to admit.
See what I mean? Yeah. All right.
Yes.
Go.
And
All right.
that's fine. I always say,
Yeah.
60% of the time it works all the time, right? That's how it goes.
I like
And
that.
that's just the unfortunate nature of the markets because we're dealing with a probabilistic environment. And as you know, I'm an edit wave practitioner, I guess the right word is. So we're forecasting the market based on fractal repeated patterns that are in a limited set. And I've pulled up here my website where people can read more about the wave theory. And so you understand a little bit what tools we use primarily to forecast the markets. And the
What
good thing
separates
is,
your, I'm sure you follow, I've asked other Ellioticians. I'm sure that you take a look at other people, Ellioticians' work and maybe not.
yes,
But what separates there's so many people practicing it, and it seems like everyone has different counts and different twists. What makes your practice of Elliott Wave different than the pack?
I think I use what I would call a more scientific approach, a weight of the evidence. So besides edit wave, I also will look at market breadth. I will also look at seasonality. I will look at sentiment
Okay.
um, and
All right.
combine those. So if you are in a third wave, you would like to see bullish sentiment. You would like to see market breadth increasing, like the
That's
McMillan
not happening.
oscillator.
The bears that are getting run over right now are saying there is no breath thrust on this rally.
Oh, yes, there was. There definitely was a breath thrust. Let me um, go quickly over there. So that's
Okay.
something you want to look at. But then, of course, no thrust is created equally. So here is the swipe breath thrust we had. Let me zoom in real quick. I think about 2 weeks ago now, earlier.
That's when it started.
Yes. So it is a simple measure. So we had that early November,
Yeah.
and it means that market breadth expanded real quick. We went from a important low to a expansion in rallying stocks. And of course, it's a market of stocks. It's not a stock market. So if a lot of stocks start to rally, it will lift the market higher. Here I have the stock market since 1924 and all the slight breath thrust events since 1940, which I believe were 23 in total. Sometimes you have double events, meaning
What
you
was
have
happening in 1953?
in 1953, on the political or geopolitical scene, I don't know.
Oh, I just
I,
wondered if I was born during a breath thrust in
oh,
1953.
that's
I'm kidding.
Okay. Anyway,
I,
it's pretty close. No, 53 was nothing. Sorry, I was looking here. It's about 1950.
you weren't even a thought by your
No.
parents yet, were you?
No, I was born here in 1974.
Oh, you
Um,
punk.
I'm a real Gen
All
Xer.
right.
Yes. Anyway,
Anyway,
so what I do is then, of course, it's an important message from the market, but you want to look at all the previous events. What did the market do? Well, in general, of course, the market rallies. So we can always say, well, the market rallied. Yes, long term, the market rallies. That's all point of a stock market, that it goes higher over the long term. Otherwise, there's no use of having a stock market. That's quite simple. But then, of course, you want to see different occasions where it happens. And there have been plenty of occasions, I'm not going to go into detail, where you get a thrust event. And then actually, after about 2 weeks, the market starts to decline. It might even go below the price from where the thrust event happened before the real bull run starts. Now, that has happened several times here in the 70s. I believe here in 2015 also. And I believe here in the 40s as well. Here in the 60s again. So there have been several occasions where the breadth thrust event was like a meh. Like, yeah, no, we didn't rally straight out of the box forever and never look back. So that you want
okay.
to then use for your edit wave. Is your edit wave then looking for a wave one higher, wave two lower setup, like something like this, 1, 2. Then maybe the breadth thrust happened here, right? You go a little bit lower first, then higher, lower again, and then, so this is the second wave, and then you blast off. So that is kind of where I use market breadth. I'm also looking at, for example, seasonality. This is seasonality, the seasonal trend of the S&P 500 over the last 95 years. Now, I always tell folks, price is the final arbiter. It's only price that matters. That's the only thing we trade. We don't trade seasonality. We don't trade market breadth. All of them are important, but they are second tier, third tier, or fourth tier. Sentiment is important, but as you know, sentiment will stay bearish or bullish for a long time before it finally matters. But price always matters. And that's the beauty of Elliott Wave, because you know above or below a certain price level where your primary view is wrong and you need to reassess, and then your alternative becomes the primary. Unfortunately, when stock markets go sideways, like here in October, for example, as shown here, then you have several Elliott Wave options available, and it doesn't make life any easier for those that want to follow it. So if there are 3, 4 different options available because price just goes sideways and you're simply waiting for a breakout or a breakdown, it doesn't happen, you can then look at market breadth. Is market breadth improving during the time it goes sideways? Yes. All right. Then maybe our bullish alternative is, gaining traction. But is seasonality pointing lower? And it did here in this case. It was looking for a low around October 26, 27, which is exactly what we got. All right. So since then, we've had a strong market rally. But then seasonality says it's just an average. That's why I would say don't hang your hat on seasonality. It's an average of 95 years. So there are years when this rally doesn't happen, and there are years when this rally is much stronger. Supposedly, seasonality were top on November 11. Well, that didn't happen. That was already last Friday. So we're pretty much now past that window where you say, you want to see a top. And then we should have bottomed here November 20th. It can still happen. We have 5-6 days left. But it starts to look increasingly unlikely. So here you all of a sudden see like, well, we followed seasonality great, and now it's falling apart again. And that happens. That's why I say 60% of the time, it works all the time. Right? That's the thing. And eventually, maybe we're going to catch back on with seasonality. It starts working for a while, then it falls apart. And that's the same with the edit wave. The edit wave is a interpretive method, right? So you interpret the market, and your interpretation of the market can go wrong because it's not easy to understand what millions of market participants are thinking about the market going forward. So back to your original, 6 months ago question. I went actually back a little bit further. This is an article I wrote on investing.com. People can follow me on investing.com, where I update every now and then. And as you can see, let's see here. Mouse goes back up there. This is from October 17 last year, where I was already looking for, it's maybe a little hard to see here, enlarge it a little bit. As you can see here, 43.50 to 46.50. That's based on standard retrace levels for a potential B wave. And said that, if we break above certain key levels, and that's the beauty of the Elliott wave, you have key levels. If we break above those, we turn bullish, right? If we turn above 3,600 or 3,800, whatever the levels are, we turn bullish, and we're going to look for pretty much the mid 4,500, which is where we are now. And we've gone to about 46, I don't know, 46, 4,700, somewhere around there. So that was really good. But then, of course, the devil is in the details, right? It's very easy to draw a straight line, but you don't know how that's going to fill in over time. So zooming out, then here we have October, and this is the path we got, right? That I cannot forecast. Well, the only thing I can forecast is, like, if this is a B wave, we know from the Elliott wave it's going to be an A, B, C pattern. So we should have filled in an A, B, C. Now, then we go back, and we so far looks like an ABC. Now, the question is, did this counter trend rally already top here in July, or are we going to see one more push higher to about 4,800? It looks like we're going to get that one more push higher, which matches, of course, with the breadth thrust, right? That's what I mean. So we're matching the breadth thrust with the Elliott wave. Then we have a C is 1.618 relationship times the length of A at 4,800. So we can push
up there. What happens up there if that count's correct? We complete it and then start heading lower again?
Yes, then this, so the primary expectation here back in December was we're going to rally for this B wave and then lower. Well, we got the rally, but, I had a C is...
The rally extended further than you originally thought. So that made it be, right, okay.
Yes, so what you say is, well, normally a C wave is equal to the length of the A wave. So that's why I had this blue little arrow here, and it got us to 4,400. Now, that's when you say, well, maybe it's time to become a little bit more cautious and those type of things if you use this word for your trading. And, we got to 4,600. So it's not too bad a, forecast from December,
I have a question. This pullback from 46 to 41, wasn't that 5 waves down?
You could. Then it's an overlapping leading diagonal. That is now our alternative. Then it would be an overlapping leading diagonal because you see this spike higher, it overlaps with this drop lower. And that is not allowed in an impulse in Elliott wave.
How about an expanding flat?
Yeah, that's possible. Don't really see it.
And I don't even know what it means, but I figured we would.
Yeah, no,
there's all kinds of flats. A running flat, a flat top haircut, a flat tire.
Yes. Yeah.
All right.
Now, this still does look corrective. So this thrust event tells us that, the statistics tells us based on historical patterns to look higher over the long term. But of course, there will be nasty pullbacks along the way. The first, the second, the third, the fourth, and the fifth, etc. The A, the B, and the C. All those patterns still need to fill itself in. Nothing goes up straight. And currently, we're going up straight. The S&P 500 had one down day so far since October 27. Over the last 12 trading days, we've only had one down day. That's quite that's only powerful. 50 points. That's very powerful. It does cause some problems for the Elliott wave because you have a very little reference point. So if your pullback is only 50 points out of 4,500, it starts to become very complicated to assess a wave to a 2-hour pullback of 10, 20 points, right? Then is this a wave or is not? And then you easily fall prey to over analyzing the markets. And then it's sometimes just better to fall back to the bigger picture, which I wanted to share. So we can still go to 4,800. So that is, I think, probably in the cards. And then we drop. So then this blue line that we had the original in December will then simply, of course, be moved forward. So the December forecast, of course, was in that sense wrong, right? It was wrong because we did go much higher. It looks like we're going even higher. But again, I cannot predict the markets. You simply go by standard patterns that we know. And then you go, well, we start off with a CSA relationship. We start off with where a B wave normally tends to top, somewhere around 50 to 76.4%. And
So
you
if we
get
just
reasonable.
stop our node just a little bit above record highs, which is what you're projecting, this
Yes,
is a formation that trips a lot of people up. At new highs, people get bullish, but it could
correct.
be an irregular B up there.
Yes, so this would then be this cycle A wave would turn into a flat, and then of the irregular kind, because irregular means the B wave is longer than the A wave.
Yeah.
Okay, but if
Okay.
we're going to go to new all-time highs, then I think we need to reassess our entire bigger picture, and that we are still in a impulse higher from the October lows, and then we have a very deep fourth wave since the 2020 low, 1, 2, 3, 4, and this is then wave 5, and I believe wave 5 will go to about 5,000. You can see we have some very nice matching Fibonacci extensions for wave 5 and 5 at 5,014. I hope your viewers can see this, and
Yeah.
5,034. So we can easily go there, and that would then, as you can see, switch the label from Super Cycle 3 in 2022 to probably in 2024. Then I was off by one wave. Again, it is sometimes hard to know exactly which wave is which. This is still a possibility. Okay, so then we had either completion here, or we're going to go one move higher. Then I always say, longer term, please understand the upside reward. The upside reward at current levels is about 500 out of 4,500. It's about 10%, a little bit more than 10%. But your downside risk on the long term is probably 50 to 75% haircut. That's simply
Wow.
what we're going to look for.
And
So,
let me
but we're
ask
not
you
there
this.
yet.
All right. Yeah. And you last time you were on, you do some GAN work. And I asked you, I said, so anything important with GAN? And you said your GAN work says 2024 was going to
Correct.
be the negative year.
Yes, correct. Yes. So that's still what we're tracking. And that would be a market panic year. I don't have the information, but that's still possible. So, we're getting already awfully close to the upside target here at 4,800 to
Yeah.
5,000 plus. The same here.
Yeah.
No difference, right? 4,800 here. And then we crater. But that cratering is not going to like instantly, right? We still need to, this is going to be a C wave. So we need a 1, 2, 3, 4, 5. So we need to set up 1 of 1 and then 2, 3, 4, 5. And then we get the larger second wave. So this is going to go lower and then higher. That's going to take months. This is going to be like 2007, 2008 market top stick time. You don't know how big the bounce is going to be, right? So we get an initiation move. I don't know how much. And then we get our counter trend rally. Can be 80, 90% retracement. Could be 50%. No idea, of course, that is so far ahead. We haven't even figured out if we're going to
You know
top
what I
here
think when I see
or
this and
there.
the timing, if it plays out that way, and we're declining into next fall, into the elections, that the
Yes,
incumbent party has no chance if we're
agree.
trading under 3,400 going into the election.
Agree. If that's then market sentiment is negative, and a lot of people will take that into consideration. They will look at their bank statements, they will look at their 401k, and go like, you know what, under this one that we currently have, it didn't go so well for me, so I'm going to vote for somebody else. And I'm not a political expert, but most of the time when we vote, it is a anti-vote. We're mostly voting against the other party. Whoever the other party is, we want to vote. We never seem to vote for. Right? Most people elected Biden because they didn't like Trump. That's why.
Well, the 29 crash reopened the door for who took over Europe.
Oh yes, absolutely. So yeah, scary
plus
times.
the currency crisis Germany was having. So
Also,
anyway, interesting history going
yeah,
on
for
here.
sure. So I think both paths, unless of course, unless we break below the October lows, right? The October lows are now the line in descent. Unless we break below those lows, I'm going to look for 4,800, 5,000 in whatever form or fashion that the market wants to get us there. That's the intermediate term. So then the Elliott wave has a fantastic if-then scenario for you. All right. So if we break below those lows, I think we're already on our way for this larger crash. Okay, then this was just a counter trend rally, and we're done. And we're going to go to probably the March 2020 lows. So if you're long, then you know where your stop or stop loss should be. Super easy, right? That's the
Yeah,
beauty of the Elliott wave. But for
it's a
now,
lot
I
of
think
risk
it's a
to
lot of
get
risk.
long
Yeah,
now.
yeah. But you know, for that's but we're looking for both. Then we apply that thrust event, right? The thrust
Yeah.
event, 10 out of 10 times tells you to look longer term higher. Well, then we match that with these upside targets. The only chart that keeps me awake at night, deal, is this one, and I think it is a little bit underrated. It is the AD line from the NYA. Um,
Yeah,
this one.
without us making it's still weak, right?
It is still weak. Let me see. Sorry, a lot of charts. This one. So in a bull market, here is 2019 to 2021. The market rallies and the AD line rallies. The AD line makes about consistent new all-time highs, coinciding with the market doing the same. Even here, 2020, you can see how rapidly the AD line went back to making new all-time highs, or even new uptrend highs, right, wherever you are. So far, we've not done it. Now, this square here, as you can see, it is about 2.5 years long, is the time it took from the 2009 low for the AD line to make a new high above the 2007 high, or whatever, 2008, whenever it makes its previous high. So it took from this long. So this is a 1 year, 2 year, about 2.5 years. From 2009, March 2009, 2.5 years out, which gets us into 2011. Took that long for the AD line to make a new uptrend high, which was the signal for the market to really kick in a new bull. And since 2011, it's been quite an impressive bull. Now, as you can see, we're starting to run out of time. This would be the longest time frame since 2009, not in its history, that the stock market has rallied without the AD line making a new all-time high. That is often long-term very bullish. It is a liquidity issue. If you follow Tom
Long-term very
McClellan,
bullish.
no,
Long-term bullish.
bearish.
Okay, you
That's
said bullish.
bearish.
Okay, all
Oh,
right.
I'm sorry. It is
That's all right.
long-term bearish. Yeah,
All
bullish,
right.
bearish, bearish, bullish. It is long-term bearish. If we don't see that new all-time high, but price does, there's a liquidity issue. It means the underlying market breadth of the stock market is not great. This is what we want to see. And currently, we're
All
not
right.
seeing it. So this chart keeps me awake. So even if we go to 5,000 and we do so on not new highs in the AD line, or even just just barely trying to retest it, that's not looking good. And we're running out of time. Why is this timing important? Because it means that if we cannot even match this time frame, which was of course a very important low in
So that'll
2009.
take us till May. It has to do it by May.
Correct, by May. If we don't see a new all-time high by May, and this is already the longest stretch we've had since 2009. I mean, look here, the 2020 market crash took a couple of months, right? Look here in 2019. That was also a scary year, 2019. That was a decent 25% correction. It took 6-7 months. And we're now already 2 years underway. And 2 years later, still no new high in the AD line. There is a serious underlying liquidity issue. No surprise, of course, because the Federal Reserve is not doing quantitative easing anymore. And that will matter for the stock market eventually. And that will fit either with this already, setting up for this C wave, or a little bit further down the road. It is going to be, in my humble opinion, a pay me now or pay me later from a bearish point of view setup. This is the only chart that keeps me awake at night, and that doesn't align with price yet. So
okay, well, I recommend you stop looking at it.
Yeah,
And get some rest. That's Dr. Pinker's medical trading advice. So, Arnaut, great to have you here. People that are watching us now and watch the video later, the best way to follow through to see your work, you could show your website or
go to my website, intelligentinvesting.market, and there is many ways you can sign up. I do this forecasting, as I just talked about. If you think, well, I don't want to read what this guy has to say all the time. You can, for example, do by major market trading alerts. You will get trading alerts at the end of the day on all major ETFs. You don't have to do any of your work yourself. It will just tell you when to buy, when to sell. We're doing really well. This is since July, up double digits. And you will get an email that looks like this for the Dow Jones, the NASDAQ. No analysis involved. It will just tell you buy, sell, hold, whatever you want to do. You don't have to listen to me yapping. If you do want to do it yourself, you can then, of course, do the major market forecasting. 50% off for the first month. It's $60, $70 a month. So you have a first month, you can try it and see if you can use it for your own work. If you don't, then sign up for a trading alert email. Again, it won't always be winning trades. We sometimes have a month of just losing trades because the market is not easy. But in the long run, having a system that helps you trading and buying and selling will be profitable. And I even do crypto forecasting, gold, but we can talk about those another time.
Okay, Arnout Ter Schure, everybody. Follow him at Intel_invest on X.
Yep, there we are.
So-called Twitter. There he is. And Arnaud, great talking to you and catching up. Have a great holiday season going into the end of the year. And let's talk again early next year in the winter. See where things are at, buddy. You're my trading warrior brother, and I root for you.
Thank you so much. Thank you so much for having me, Dale. It was a real pleasure being allowed to explain a little bit of my thoughts behind where we are in the markets and what keeps me up at night.
Okay, well, we appreciate your giving spirit in coming here and sharing your stuff. Really do.
Well, wonderful. Have a great season.
All right. Good hunting, Arnaud, everyone. Thank you. Remember, don't just count your pips, count your blessings. I'll see everyone later. Not later, I mean tomorrow. That's later. All right, good hunting, everyone. Adios. Thanks, Ingmar. See you guys.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.